dando esa comparecencia sobre tipos de interés. Ha dejado sin cambios. Escuchémosle.
Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Since early last year, the FOMC has significantly tightened the stance of monetary policy. We've raised our policy interest rate by 5.25 percentage points and have continued to reduce our securities holdings at a brisk pace. We've covered a lot of ground, and the full effects of our tightening have yet to be felt. Today, we decided to leave our policy.
Bueno, el primer movimiento importante es un tema táctico, ¿no? De geopolítico. Sale con una pantalla de iPad de Apple, justo en el momento en el que está toda la batalla con China y Estados Unidos para leer en comunicado, pero igual que tienen aquí la pantalla, ahí el presidente de la Reserva Federal está con su pantalla de Apple en un hecho simbólico alrededor de esa batalla comercial entre Estados Unidos y China por Huawei, Apple. Parece que también hay un mensaje ahí oculto en este inicio de la comparecencia de Jerome Powell. Seguimos escuchando la explicación de ese forecast por parte del presidente de la Reserva Federal.
Activity in the housing sector has picked up somewhat, though it remains well below levels of a year ago, largely reflecting higher mortgage rates. Higher interest rates also appear to be weighing on business fixed investment. In our Summary of Economic Projections, or SEP, committee participants revised up their assessments of real GDP growth, with the median for this year now at 2.1%. Participants expect growth to cool, with the median projection falling to 1.5% next year. The labor market remains tight, but supply and demand conditions continue to come into better balance. Over the past 3 months, payroll job gains averaged 150,000 jobs per month, a strong pace that is nevertheless well below that seen earlier in the year. The unemployment rate ticked up in August, but remains low at 3.8%. The labor force participation rate has moved up since late last year, particularly for individuals aged 25 to 54 years. Nominal wage growth has shown some signs of easing, and job vacancies have declined so far this year. Although the jobs to workers gap has narrowed, labor demand still exceeds the supply of available workers. FOMC participants expect the rebalancing in the labor market to continue, easing upward pressures on inflation. The median unemployment rate projection in the SEP rises from 3.8% at the end of this year to 4.1% over the next 2 years. Inflation remains well above our longer run goal of 2%, 4% over the 12 months ending in August, and that excluding the volatile food and energy categories, core PCE prices rose 3.9%. Inflation has moderated somewhat since the middle of last year, and longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Nevertheless, the process of getting inflation sustainably down to 2% has a long way to go. The median projection in the SEP for total PCE inflation is 3.3% this year, falls to 2.5% next year, and reaches 2% in 2026. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. As I noted earlier, since early last year, we have raised our policy rate by 5.25 percentage points. We see the current stance of monetary policy as restrictive, putting downward pressure on economic activity, hiring, and inflation. In addition, The economy is facing headwinds from tighter credit conditions for households and businesses. Range for the federal funds rate at 5.25% to 5.5%, and to continue the process of significantly reducing our securities holdings. We are committed to achieving and sustaining a stance of monetary policy that is sufficiently restrictive to bring inflation down to our 2% goal over time. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. If the economy evolves as projected, the median participant projects that the appropriate level of the federal funds rate will be 5.6% at the end of this year, 5.1% at the end of 2024, and 3.9% at the end of 2025. Compared with our June summary of economic projections, the median projection is unrevised for the end of this year, but has moved up by a half percentage point at the end of the next 2 years. These projections, of course, are not a committee's decision or plan. If the economy does not evolve as projected, the path of policy will adjust as appropriate to foster our maximum employment and price stability goals.
Bueno, todo parece indicar, porque estamos viendo con Powell, que la posición ahora mismo de tipos de interés es suficientemente restrictiva, al menos eso que está diciendo Jerome Powell en este inicio de la comparecencia de la rueda de prensa posterior a la decisión de dejar sin cambios los tipos de interés en Estados Unidos. Aún así, el mensaje de Powell es mantener suficientemente restrictiva esa política, está diciendo hasta llevarla al 2%. Es decir, no cierra la puerta a otro aumento de tipos de interés que pueda llevar esa inflación al entorno del 2%. Pero tampoco lo está dejando claro que eso pueda ser. Simplemente dice, debemos mantener la política lo suficientemente restrictiva. ¿Ahora mismo es restrictiva? Sí. Ahora mismo la política y el punto en el que están los tipos de interés es restrictiva. También está diciendo que ve algún signo en los salarios donde va viendo algún movimiento de relajación. Por lo menos no está planteando que haya un movimiento de volver a un movimiento de segunda ronda inflacionaria o tercera ronda ya en este caso por culpa de la inflación. Seguimos escuchando a Powell. Del Valle, ¿qué es lo que está diciendo Powell? ¿Cómo se va viendo esa fotografía?
Bueno, pues importante, José, diciendo y recalcando que están preparados desde la Reserva Federal para subir más los tipos si hiciese falta. Eso es lo que han dejado en esas proyecciones. Ahora mismo Powell estaba leyendo exactamente el mismo comunicado que han emitido a las 8 de la tarde. Estaba leyendo también esas proyecciones que ya habíamos analizado en cuanto hemos conocido la pausa de tipos de interés y recalcando varias veces que lo prioritario es volver a ese 2% de inflación que va a tomar tiempo. Ha reconocido Powell, ha dicho que esto va a tomar tiempo, que es un camino, exactamente ha dicho, que es un camino que queda todavía largo por recorrer para volver al 2% de inflación. Dice, eso sí, que a partir de aquí, como las tasas están en territorio restrictivo, algo que ya había dicho en anteriores reuniones, pues que pueden proceder con cuidado, de ahí que en septiembre se haya mantenido la pausa, pese a que las proyecciones apuntan a un 5,6, que quedaría todavía una subida en este año, y que están preparados, como te he dicho, José, para subir más si fuese necesario.
A ver, primera pregunta que le están haciendo al presidente de la Reserva Federal.
Where it is at 5.25% to 5.5%, while continuing to reduce our securities holdings. And we say we're committed to achieving and sustaining a stance of monetary policy that's sufficiently restrictive to bring down inflation to 2% over time. We said that. But the fact that we decided to maintain the policy rate at this meeting doesn't mean that we've decided that we have or have not at this time reached that stance of monetary policy that we're seeking. If you looked at the SEP, as you obviously will have done, you will see that a majority of participants believe that it is more likely than not that it will be appropriate for us to raise rates one more time in the 2 remaining meetings this year. Others believe that we have already reached that. So it's something where we're not making a decision by deciding to about that question, by deciding to just maintain the rate and await further data.
So right now, it's still an open question about sufficiently restrictive. You're not saying today that we've reached this level.
We're not saying, yeah, no. Clearly, what we decided to do is maintain the policy rate and await further data. We want to see convincing evidence, really, that we have reached the appropriate level, and we're seeing progress, and we welcome that. But we need to see more progress before we'll be willing to reach that conclusion.
And just on the 2024 projections, what's behind that shallower path for interest rate cuts and the need for real rates to be 50 basis points higher?
Right. So I would say it this way. First of all, real interest rates are positive now. They're meaningfully positive. And that's a good thing. We need a policy to be restrictive so that we can get inflation down to target. Okay. And we're going to need that to remain to be the case for some time. So I think, remember that of course, the SEP is not a plan that is negotiated or discussed really as a plan. It's accumulation, really, and what you see are the medians. It's accumulation of individual forecasts from 19 people, and then what you're seeing are the medians. So I wouldn't want to, bestow upon it the idea that that's really a plan. But what it reflects, though, is that economic activity has been stronger than we expected, stronger than I think everyone expected. And so what you're seeing is this is what people believe as of now will be appropriate to achieve what we're looking to achieve, which is progress toward our inflation goal, as you see in the SEP.
Thanks. Let's go to Rachel.
Hi, Chair Powell. Rachel Siegel from the
Se
Washington.
pone el mercado negativo, S&P 500 cayendo 0,01, una vez que Powell, todo parece indicar que va, siendo, sí, ha habido pausa, ya está una previsión que además es un poquito peor de lo que esperaba el mercado y además lo que se tenga que hacer se hará. Más preguntas a Powell, aquí del Washington Post, alrededor del debate de una nueva subida de tipos de interés para ya desde ahí mantener un movimiento en el que permita un aterrizaje suave a la economía estadounidense. Vamos a escuchar a Powell.
Was to maintain our current policy stance. And I think there was obviously unanimous support for that. But this, of course, is an SEP meeting, and so people write down what they think. And you have some, you saw, I think 7 wrote down no hike at this meeting, or between now and the end of the year, and I think 12 wrote down another single hike in one of the next 2 meetings that we have between the end of the year. So it wasn't like we were arguing over that. People were just stating their positions. And really what people are saying is, let's see how the data come in. We want to see, what we want to see. We want to see that these good inflation readings that we've been seeing for the last 3 months, we want to see that it's more than just 3 months, right? We want to see, the labor market report that we received, the last one that we received, was a good example of what we do want to see. It was a combination of across a broad range of indicators, continuing rebalancing of the labor market. So those are the 2 things. Those are our 2 mandate variables, and that's the progress that we want to see. But I think people, they want to be convinced. They want to be careful not to jump to a conclusion really one way or the other, but just be convinced that the data, support that conclusion. And that's why, given how far we've come and how quickly we've come, we're actually in a position to be able to proceed carefully as we assess the incoming data and the evolving outlooks and risks and make these decisions meeting by meeting.
And in your view, I know nothing has been decided yet, but what would one...
Se recupera el mercado, 0,11%, está ahí jugando al tenis, ¿no? Para aquí, para allá, pelotita, para aquí, para allá, alrededor de si son suficientemente restrictivos los tipos. Ha habido una frase bastante significativa en la que ha dicho, no estamos decidiendo en esta reunión si son suficientemente restrictivos. Simplemente optamos por una pausa en esta reunión. Seguimos escuchando a Powell.
We've learned all through the course of the last year that actually we needed to go further than we had thought. If you go back a year and what we wrote down, it's actually gotten higher and higher. So we don't really know and that's why, again, we're in a position to proceed carefully at this point. A year ago, we proceeded pretty quickly to get rates up. Now we're fairly close, we think, to where we need to get. It's just a question of reaching the right stance. I wouldn't attribute huge importance to one hike in macroeconomic terms. Nonetheless, we need to get to a place where we're confident that we have a stance that will bring inflation down to 2% over time. That's what we need to get to, and we've been moving toward it. As we've gotten closer to it, we've slowed the pace at which we've moved. I think that was appropriate, and now that we're getting closer, we have the ability to proceed carefully.
Let's go to Steve.
Está planteando Powell que tampoco el movimiento de una subida más macroeconómicamente va a tener una afección muy fuerte, salvo que haya un movimiento de repunte. Entonces sí puede hacer un poco de tame, ¿no? Alrededor de la inflación, puede darle como un capón por arriba para que no haga ese movimiento, pero dice que tampoco es ahora mismo la clave fundamental porque ya los tipos están en una situación suficientemente restrictiva. Seguimos escuchando ahora preguntas alrededor de cómo puede esa tasa de inflación, ese tipo de interés, llevar la inflación, si es más persistente, al entorno del 2%.
A funds rate above the longer run rate for 4 years in a row, at what point do we start to think, hey, maybe the longer rate or the neutral rate is actually higher? Thank you.
En concreto sobre los tipos a largo plazo. Escuchamos a